Does the coronavirus spread over the wireless Wi-Fi in my phone? No. You know what? It's a very important question. Is the market needed this correction? Market always needs correction if you're a trader. So from a trading standpoint, yes. From an investment standpoint, no. This is a significant hit to a lot of people's statements, and interesting that it's coming, even through the last day of the month. Although this market's really going to try hard to rally to get something positive off the headline. So yes, is it headline driven? Yes, but there are real potential, and I stress potential, economic outcomes here. And this is not new. We really, when I wrote the notes from Underground 2.5, 3 weeks ago, and I was on in this room, we were talking about it, why they needed to get out ahead of this, because it is an economic, it's an economic event with real economic ramifications. And we can sit here and argue, because the argument that's taking place amongst fairly enlightened thinkers, as far as I'm concerned, I'll call them that, because it has been going on, which was, is this going to be a supply shock or a demand shock? And that discussion is taking place all over the place. I've been listening to Bloomberg Radio most morning. Bob Michael from JP Morgan was good. Scott Menard and others. I'll tell you, yesterday I did 2 podcasts, which were interesting. But is this a supply shock or is it a demand shock? And as Peter Bookmar and I've gone back and forth, because he's been more of a supply shock and I've been stressing more of a demand shock, and that we really came to the conclusion you'll probably see both. But it's the demand shock that is the most important. And and in the United States, here's to me what the fear is. The fear is this: that if you go into a demand shock, you have to watch unemployment. And if unemployment jumps quickly, can we go from 3.5% to 5.5% unemployment? How fast? How rapidly would that be? But if that was the case, that's the fear, because everybody who's been bullish the equity markets, the primary focus has been on the consumer. And they talk about, it's full employment, the consumer is healthy. That's why everybody could, even if valuations got stretched, that's what they were pushing. But if you go into a demand shock or some type of demand stress, let's not use the word shock, let's just say demand stress, and unemployment jumps, well, those consumer numbers are going to dissipate quickly, and you're not going to get it out of capital expenditure. Because the last thing that businesses want to see right now is any sense of a consumer slowdown, because that would really cause them to get concerned. And the concern we're seeing is actually showing up in the corporate bond markets. I mean, look at what that spread that we've watched over the years, TLT, HYG. For those who look at the equity markets, I can look at other things, but look what that spread has done this week. So you're now starting to bleed into the sense that there can be some real economic fallout here. And that's why, because here's the discussion that takes place. Well, the Fed really shouldn't do anything, because if they cut rates, it's not going to have any impact anyway. But I would say that 2 or 3 weeks ago, had they got out in front of this with stating that this is an emergency measure that would be taken back if the virus proved not to be as virulent as some were predicting, and then we'll just take it back. So therefore, it would not have meant in any way a financial impact. Yeah, would the equity markets have gotten a boost? Yeah, probably, because they've just been, it's Pavlovian for them to, they cut rates, you get a you get somewhat of a rally. Okay, so that we've seen and that we know. But it would, had they really done it, they're big on forward guidance. Well, the forward guidance should have been, this is emergency cut, and it's going to be a little more drastic than initially thought, because we want to ensure that those who need access to borrowing, plus on a global perspective, it would have put some downward pressure on the dollar, which was needed. Again, let's go back and look at the CRB index. Let's go look at the Bloomberg Commodity Index. As I looked at the Bloomberg Commodity Index this morning, hold on, let me be sure I got the right.
What was the one that I read? I can't pull up my screens on that stuff until next week.
Okay, so the low was 70.60. Okay, that is, I know this is going to shock you, we're making 25-year lows on that index after it looked like it was breaking out to the upside 6 weeks ago. And this is where it really signaled itself. Well, if you've gone from a nice, being above the 200-day, being a nice rally, you can go back to the beginning of January late December, when this stuff looked like it was really good. We were going to get into some inflation, which was benefiting the emerging markets. Now you've reversed this, and that's where it's really shown. So I rest my case on that. What else do you need to see? When you see this massive movement, and it's taking the emerging market currencies with it, by the way, of course, the ruble has gotten a hit, the peso, which was fighting it off, and I still think in the longer term, Mexican assets are going to be the place, because whatever comes out of this, you're going to see a rejiggering of global supply chains. So that will be interesting to see who benefits, and that's where the money will be made in trying to figure out who's going to be the greatest beneficiary of this. China has definitely been hurt here because, again, as we talked, twice this week, their lack of transparency in confronting this really, people could put up with a lot of inconsistencies of China, but this one really, really sent some shockwaves. So that'll be part of the fallout. But if you look at this, we're 25-year lows all of a sudden on the commodity index. That's taken out 07 and 08. Now, I know that some people say, well, is this going to lead to deflation? Well, that's always been my argument. And the central banks, why are they talking a coordinated strike? It's because there's a fear of the deflation and of this setting in. But again, we're early in this, but there is a real economic impact to this. This is not just financial. I can't be more consistent about that. So that's how I would answer that question, is this is economic. Is the fallout complete yet? No, we're very early. And this is really not a financial situation yet, full of stress. This is not 2007, 2008, which was first financial and then economic. This is economic, and the financial will follow, and that's because of the huge amount of debt. And we're going into this potential crisis carrying so much debt, which is why the Fed ought to have acted really quickly. But again, they seem to be much more concerned about financial situations than they do about economic situations, except when they appear before Congress and talk about their dual mandate. And that is a criticism. And that was the interesting op-ed piece that has gotten a lot of gravitas, from Kevin Warsh yesterday, because that's what he was criticizing him about, and Scott Menard and others too. It's, yes, I know that cutting rates isn't going to force you to spend more, but it would have relieved some upward pressure on the dollar, which is a great negative for the global economy at this time. So that's how I would answer the question. Now, I'm going to post, I hope, Sunday. I did 2 podcasts yesterday. I did a half an hour with Lacey Hunt from the Hosington Letter, which was a great honor for me. Really, I've respected him for a long time, and we had some interesting conversations about debt and the central theme of debt. And then I did a second one for about 45 minutes with, as I introduced us, with the four horsemen of the apocalypse, David Rosenberg, Peter Bookvar, Jimmy Bianco, and myself. And Jimmy Bianco was really funny because he said, hey, Dave Rosenberg, you're probably the most bullish one here. I thought that was very, very funny on Jimmy Bianco's part. But you know what? And I say that tongue in cheek about the four horsemen of the apocalypse because, listen, the issue is not whether we're negative or I'm negative on my outlook. It's the analysis. And if the analysis presents you with a more negative outlook, fine. You know, it's like I said, I think I was really on live with you guys 2.5 weeks ago, a week ago, you know, when I said I was cleaning out my entire SEP account. And on that one Monday when they gave us a little bit of a rally, I said, I cleaned that out. I sold everything in there. And that wasn't that I'm a doom and gloom. You know, everybody wants to paint you to a narrative of their choosing. No, but there were things out there that were making me more than a little uncomfortable. And you liquidate because you go, well, how much more, you know, my thinking is how much more is there to the upside versus what is my risk to the downside? To me, that's just a qualitative approach to either trading, but more importantly, to investing. What's my risk reward ratio from these levels? And as I would say to people who are way too overinvested in the equity markets, is that, hey, this is manna from heaven that is just dropped into your lap. Take 25%, take 50% off, and if it goes up another 10%, okay, you're still partaking, but your rewards have been great. And for what? You know, it's all been predicated, not all, of course, the United States has had somewhat of a decent growth story, but I'm sorry, I have to get out of this chart. So we know that and we see that, but it's not a gloom and doom scenario. So if you say to sell stocks, don't tell me about tax hits because you're paying basically a 23, 24% if you've been in here long enough for long-term capital gains. And we know that people would argue until they're blue in the face for a 24% flat tax. You'd sign up for it all day long. So tell me what's the difference. So, you know, so it's not a doom and gloom scenario. And it's just that, hey, I see what's out there. There are things that bother me, and there's things that bother me even more because we're seeing it now reflected for the first time in some of the stress in the corporate debt market that has appeared for the moment. And it hasn't been there, but yet we have gone into this crisis with a huge, huge amount of debt. And I'll tell you what, be very careful here with the unemployment situation because those numbers start to move up. The consumer, which has been supportive of this economy, will start to retrench, and that'll change everybody's dynamics.
Yeah, and all those junk bond ETFs all elected their ORL quarterly sell stops today, and then came back up to those lows. So there's a big flushing in. Well, the S&P's got the quarterly stops, the gold, the silver. I mean, yeah. they ran everything out. With David here in the room on Monday, he bought puts. In the gold, He got out of his futures and bought puts. He just got out of his puts this morning when they ran the 1581.5 stops.
Well, on Monday, that's why I did that short piece, that 27-minute piece.
Yeah.
And we had talked about the gold, and I said, you know, my concern was that we were going to see something from the IMF, and I said I was liquidating all my gold. I unfortunately bought it back a little too early, but only about 15% of what my position was, just because I wanted to test the waters. And again, that's the part of being that floor trader instinct in me, which I have to beat it out of me every day because I do stupid things. The same thing with the Fed funds contract. Fed funds has been the probably best risk reward trade this week, because you could have bought the March Fed funds, which I did on last Friday afternoon and Monday at 42.5 to 43, 98.40. So you could have made, if you sat through this morning, 20 basis points for literally a $10 a contract risk relative to where the Fed was already at. You know what? That's like one of those that when we really talk more and scour more, those are out there to be had, because that was almost a 40-to-1 payout as far as I'm concerned for the week. And now, and if they would have had to, because that was predicated on them doing some type of emergency measure, and by just buying the March, yes, the April Fed funds and May and June have had much bigger weeks, but for a very low risk, because the Feds, which is it's a 30-day or 28 moving average smooth when you get to the month. So now March will move much more slower come Monday, because it's a smooth moving average, and every day that goes by, the formula works against you. It's almost like an option. So that was pretty good. And those are the ones that are hanging out there and react. So good on Dave, because we talked about it. My fear was at the IMF, and it's still possible that they're going to announce some gold sales, because they're going to have to, again, we talked the other day, to shore up the balance sheet, because they're going to take a hit on Argentina. I don't see a way around it. And that's not even being discussed. We have other things that are now, popping up. You have Russia and Turkey, who actually had some real battles where 33 Turkish troops died overnight from Russia.
Attention, Ira, this morning when I saw that in the middle of the night, and that's something you had broached that subject months ago. What happens when all the NATO people decide that they don't want to back Erdogan?
Right. It's coming, and we're in the throes of it, and it's going to call the question. And it is amazing. I was just talking with my wife about this. What's amazing is this: when things are really difficult in the world, that the hot spots and those who are troublemakers as global actors seem to want to ramp things up to find out how far they can push us when the world is distracted. So it doesn't surprise me, but let's see where this goes between Russia and Turkey. Because really, if it starts to elevate and escalate, under Article 5 of NATO, is the United States going to come in and support the Turks, as is the rest of NATO?
It's good to point out that the Turks are defending the terrorists in Idlib.
Oh yeah. What else is new?
Yeah, I'll tell you the other thing that was interesting was that piece about the Hezbollah and Venezuela, and actually the Al Qaeda training camps are in Paraguay.
Yeah.
Great.
The world is a difficult place. And again, we can only concentrate on so much, but it is interesting how these things do escalate when the world's attention is, absolutely focused on certain areas. And there's a lot of things in this world, but now we're gonna focus, of course, on is there going to be central bank action, the coordinated action? I thought, and here's politically, and David Rosenberg and I, when we discussed this yesterday, he disagreed, but my take on this is, look, if the Fed comes now, I think that it supports Bernie Sanders, because he's going to stand up and say, look, yeah, sure, it's always there to protect the equity markets. It's always there But what about when it's economic? The Fed is slow to act. So I think that the Fed again has put themselves in a difficult situation, and they don't want to be political, but they're going to be political. You can't help it. And Bernie, I think this plays right to him. That's just my sense. That's a conjecture on my part. What do I know? I don't know anything more than anybody else. But these things just there's no free lunch for anybody, and that's why I think the Fed really erred. I said it a few weeks ago, and now they're going to. And now when they come, I thought 50 basis points, if you remember when I first wrote about it, was required. 50 basis points is nothing, especially when you look, and more importantly, our beloved curves, although we've seen some steepening, of course, over the last 24 hours from where we had gotten to, because yesterday morning, the 2.5 was inverted, and then we, shot out about 7 or 8 basis points, and it uninverted and actually got to about 4.5 positive this morning. And that's because the sense is that they'll have to do more. And that's what they really should have been focusing on anyway, is to push that curve. They need to steepen this curve. It's not healthy because the bank stocks are also dragging a lot of this down because, the lower rates go. I just came from a mortgage refinance. I mean, that's where I've been this morning, and going through that process is so arduous, and what they're worried about, you'd laugh. I had to redo one sheet of paper because my 9 looked like a 7. I said, really? That's what they said, yeah, otherwise they'll push us back at us and we'll have to redo the whole thing. I said, yeah, that's just what the regulators should be worried about, whether my 9 looks like a 7.
Hey, Ira.
It's the world in which we live. Yeah.
So this gold's correcting. I don't think it's going in a bear market. Is this has something to do with interest rates or expectations of interest rates?
Well, you know what? Somebody wrote onto the blog, and talked about, well, we're in a deflation. And if you look at commodity prices, and so the first knee-jerk action, and it's been talked a lot about on Bloomberg Radio this morning, they're all comparing it to 2008 when we started into this downturn, and gold initially took a hit because, everybody was thinking that, well, you sell whatever you can. I think this is a correction based on people taking some profits off the table, because that's what we do as investors and traders. I've just sustained some losses, or where I had big gains, those eroded. I'm going to take some gains other places. But this is what my whole analysis of being bullish gold for the last 3 years, 2 years especially, has been about. Again, basically against foreign currency, is that when you got to a deflationary fear, that the central banks were going to panic, and that was going to ignite the next big rally in the gold. Well, you know what? It's going to cost me some money to test this, but I am going to step in here. I don't have good enough levels yet to really commit, but I think this is, that end. And as Judd pointed out to me, I hadn't seen it, that the COMEX did raise margins this morning. Now, I will tell you, as a sitting CME Group board member, that this is not a decision made by any human beings. This is an automated risk system that says, hey, based on this volatility and this pricing, you have to raise margins because you need, based on the risk levels that we're seeing, you need to come up with more capital to sustain these positions. So before anybody thinks that there's anything nefarious, it's not. It's very well laid out, and actually to be applauded about how, in fact, they do this. It's not like the old days of going back to the 1960s and 70s and maybe early 80s before risk assessment was automated. So
it sets up a buying opportunity, really, if somebody wants to put some more money in.
I think so. I think so. And, I think that must have been Dave from Czechoslovakia who bought those puts. So, yes, you know what? And vol levels are elevated. And that's another thing I'm looking to see. And I think it's weighed on the equity markets, especially because some of these people whose main trading strategy has been short vol, and they've been rewarded. We've talked about this a great deal. I said, I think you're out of your mind. And coming into 2020, in some of the conversations we had, I said, I would never put on that strategy, nor would I invest with anybody who's a short vol seller. Yeah, it generates nice returns, but right now they're sucking wind pretty good because for the first time, even going back to December, or the last quarter of 2018, where you got movement back and forth, this has been a sustained elevation in volatility. So we haven't seen numbers from certain actors yet. And let me come back to something else that took place this week. And that I didn't talk about it with you yet. I had a conversation with my favorite guys who are global macro traders and don't do it systematically. But we talked about it yesterday. When Jamie Dimon came out Tuesday and Wednesday and discussed that JP Morgan would be returning to the discount window, that was nothing to take lightly because everybody's been shunning the discount window because it's usually a signal that you're in real trouble. But when Jamie Dimon made that comment, and there's a couple articles out yesterday and today about it, I thought that was interesting. And I said, it got by the market pretty good. Nobody really raised that issue. But why was JP Morgan willing to return to using the discount window? Still an interesting question. And it may be nothing more than to try to circumvent the lack of a real standing repo facility. Because if you could take, government debt and bring it to the Fed discount window and borrow at a discounted rate in a very aggressive fashion, it really does work a way around the repo. And what's his name has been out there talking about it. Quarles he gave a speech about it 2 or 3 weeks ago. So it's almost like the Fed would like for people to start reusing the discount window as an immediate way to shore up cash when they need it. So, but it really caught my attention. It's making me be very aware of this. So the reason I cited.
Ira, I've been looking at gold, euro, and gold and yuan while you've been talking, and the patterns there basically tell you just to be cautious and wait a little bit.
Yes, I agree. You know what? And that saved me quite a bit of money because I kept looking at it, And all it is again, people are unwinding some of the carry vehicles, as you see with the yen and you see with the euro especially. The Swiss is a story unto itself because actually the Swiss National Bank, they actually took a big hit because, they have huge portfolios. I mean, in the big picture, they're in a much better situation, but they've actually taken a hit to their investment book as everybody else has because they're carrying an enormous amount of global equity. So yes, Judd, those are good points.
Take a look at Euro Swiss on a weekly.
Yeah.
You've been talking about this for a while, and this is trying to bottom.
Yeah, it is. And a lot of that has to do with, again, we can go back to what, the first person who came out yesterday was Lagarde opposed to any kind of rate cut. But I thought that was a very important, and that's why she's an owl and not a dove or a hawk, because she should have said exactly that. Well, we don't see the need right now to, because she knows a rate cut is going to be insignificant for her, especially. The Fed is in a little different situation. But, I mean, she could cut if it's a global organized cut. But if she moves to do this with interest rates, then again, it removes any sense of need for stimulus on a fiscal side. So she's much better off holding her powder than rushing in to want to cut rates. I thought that was a very intelligent statement to get out ahead of it. But she's in an opposite situation than the Fed is. And the euro is just not that an important vehicle for a lot of the emerging markets, because they borrow in dollars because they trade in dollars. So much of their trade is dollar based, so they try to keep some relationship. But if the amount of trade that they're doing, and if you look at the Bloomberg Commodity Index or the CRB, and you go, wow, they could really take a hit here because their revenue streams are going to be declining based on the drop in commodity prices, then there's a dollar funding issue that arises. We're not there yet, but you can look at all the charts of the emerging market, currencies, and it tells you this has not been a good week. Listen, I can put up the peso, I can put up the ruble, whatever you want. We've watched the ruble drop here from the onset of this crisis, because we could pin this at January 15th, let's say, okay? The ruble had already traded down to 61 through 61, and over the onset of this, we've gone from, let's say conservatively, we'll say 62 ruble to the dollar. Today, we made a high of 67.5. So you basically had a 10% drop in the ruble. That's no small thing. And so if you have dollar funding issues, your funding costs have gone up if you're a Russian-based borrower. Or, we can go across the board. Turkey is going to be a different story because Turkey now has a lot of geopolitical effects with it, as well as Erdogan putting his hands in too many places for global investors to think about. So, I mean, these are things.
He's been raising dollars big time.
Yeah. So, I mean, you've had all this stuff going on. The world is again fraught with risk, and what we did, we saw a deflationary scare this week in the markets, because again, with the amount of debt that is in the world, and I don't care what PIMCO's people put out. I thought that article that they wrote yesterday, or I can't think of his name, was pathetic. It was all over the place. He was trying to cover all his bases, but it's like, you have to be careful. It's like the same thing with Trump giving that press conference. He should have had Tony Fauci being the only one, and the woman doctor, who is really good too, answering questions. If you're dealing with medical issue, there should have been no discussion about equity markets or interest rate. There just shouldn't. It was the wrong place for it. Stay to what the picture is. There's just too much nonsense that makes its way, and all it stems from this concept, and it's everywhere, is appear like you're doing something. So if I'm holding a press conference, I'm doing something, but no, you're not. You're actually making things worse. So if you don't have anything to say, don't say it. Don't, this idea to get out ahead of it and look like we're doing something. I'm sorry. You just cloud the issue and you make things more difficult.
Well, they're going to have the Sunday morning shows are going to be a giant revival meeting.
Oh God, yes.
That's what
very good point.
Giant revival meeting, and it's not going to be fact based. It's not going to be science based. It's going to be a revival meeting.
Yeah, and it's all politics. And you know what? Each side will be playing it. Oh, you know what? The amount of money is insignificant. They throw around these numbers. Oh, go 2 billion, 8 billion. These are rounding errors on the federal budget deficit. Okay, so if there in fact was something, then say, hey, I'm going to make X amount available here. Well, here's, because it makes no difference. What's 10 billion to the federal deficit? Please.
Yeah, but I think that's just talking points. The reality is, whatever's needed in the end will be there. There's no doubt about it.
I don't believe that.
Yeah, I
They're
think
just
that.
talking about numbers. It doesn't matter.
Yeah, I think that's right. I think that's it will be there. But I'll tell you what, I thought, and I said it very openly, is that they should have come up, I said Trump should have come up with a $50 million to keep everybody on that ship in Yokohama Harbor, because you had a floating petri dish. And paid all the people and say, look we're sorry, this is a great inconvenience for you, but we really have to look at this, and we're going to really pay people for your time and efforts. And it would have gone a long way, rather than trying to get everybody off of there, because you needed that petri dish. When I talked to my brother from a science standpoint, everybody's bashing Iran, but he's kind of interested in watching Iran, because if they're taking a laissez-faire, well, we're not sure what we're going to do, it actually becomes a good case study. And you can say, well, that's kind of rude. Well, nobody's asking them to do that, but if that's the route that they take. And he said another part of it is that the Iranian population is much younger than a lot of other the places that have it, where the average age is in their mid to late 40s. In Iran, it's like 31. So it's a more youthful population. You may see a dramatically different effects as to the healing and the rate, about with deaths and everything else. So while you want to bash them, if they allow people to study, the thing is, you need data. You need data to understand how this spreads and its impact.
Yeah, and the
And
communists
that's what
faulted
they
for
did
blocking
together.
the data acquisition. And they
Yeah,
screwed it up.
we're right. They did. And that's where China really, because they want to control everything, because,
Yeah.
it would be a blight on them. But it really, and I think that they're really reeling from this. And, as people talk about, that's how Xi has some real problems, because
Ira, your idea about looking at how Iran does it, also similarly, look how South Korea does it, because their circumstances are more similar to China's, but I suspect they're going to do a hell of a lot better job, like off the charts better job. What do you think?
oh yeah, because they're much more advanced. Korea it's not an emerging market. Korea has emerged. It's a very advanced country with a very advanced education system. High tech, a decent medical system. Japan is kind of more interested in closing those schools, but I think what Japan doesn't want to admit to you is that they're trying to protect the Olympics. This is a huge investment with a huge hit, and this is very important. So I think you're going to see, this is just my opinion. It's just, you would see more radical efforts by the Japanese.
Yeah, that's a good point.
Do we have any other questions?
I kind of think that as winter ends in the northern hemisphere and summer comes, that becomes something that's part of the remedy.
Maybe because that's what worked supposedly with SARS. But then people bring up the point that you need to watch Singapore. Because Singapore, the temperature doesn't vary. So why isn't it just dying off in Singapore?
Okay, yeah.
Yeah, I mean, again, what we're discussing is a good science, because you want to proceed along and find real science rather than just making headlines. And I know, for my brother, this is new, where you see the dynamic so immediately. And he's only really started reading the blog for the last couple of years. So his financial acumen has picked up, because he'll call me and we'll talk about it. But he is amazed, and he's angry with the media, because he thinks the media is so irresponsible, because, again, they're just in a hurry to get the story out.
They're in a hurry to bash Trump, too.
Well, that may be gone, but they're in a hurry to get the story out, especially in a world where social media has so much impact, because if you're the established media, you're competing against what's coming out. And so everybody's just in a hurry. And when he reads, he says the context is so wrong. It's just a headline. It's, you know, it's everything that we've had to deal with in the financial world for a long time. And now you're seeing it, you know, in science, and the scientists are really meeting people of science who, you know, proceed along a very methodical way, are really frustrated by it because they're having to counteract what are just egregious headlines.
You know,
Egregious.
I got some background in journalism, and I think the standards of journalism are really the lowest they've been in modern times, and I think a lot of it they've become trained as a class to be ideological, and they're always trying to find the ideological framework or an ideological narrative, and that's part of why they're sloppy, and they've turned science. They're not afraid of science being ideological either. So
no, I know, and you're seeing it, but there's nothing we can do about that. So we do the best. But I heard it as frustration. He said, "Wait a minute, where did you see that?" And somebody wrote a scathing piece about Iran yesterday, and I sent it to him because it was after him and I had this discussion. He says, "Yeah," he says, "that's exactly what they've gotten all wrong. Where from a science standpoint, we need to see this stuff. I need to see that data. I need to, you know, again, everybody talks about vaccines. Creating a vaccine is a very arduous process. And again, it's a process. It's not easy, and people want to throw out, it just doesn't come about like that. And the coronavirus has been around for a long time. That's why the Israelis supposedly say that they're close to deal with this, because the coronavirus is really the type of virus that feeds the common cold. But this one has taken a little bit of a different turn. And how none of you are, but and Judd, well, he grew up in a rural area, so it's different. But I can tell you, I was a freshman in high school when the Hong Kong flu hit in 67, 68. And I can tell you how sick I was. I was really sick, and I caught it twice. And I had 105 fever twice. The school, my high school, was 90% out during the Hong Kong flu. Imagine that, 90%.
Wow. Forgot about that one. I dimly remember that. I mean, I wasn't on the scene, but I dimly remember reading about that.
Oh, God. I remember I was playing basketball, and I was walking home. It was the winter. It was January. I never forget it. And I was freezing. I was shaking. And I got home, and I thought I had a headache only because like a ball bounced off the rim and hit me in the head when we were doing shoot-arounds. I got a headache. I got home. I had 105 plus fever. I know how sick, you know, that was. So, you know, and these things come around. And again, my brother keeps reminding me, you have to ask the question, how lethal is it? That's the real question. How lethal is it? And who is it lethal to? What do we know? You know, those are the things that they're learning. So,
yeah, my sister-in-law works for the NHS. I worked for the NHS and did some work that had to do with epidemics in the NHS.
Yep.
I said, Sue, how come it seems like men are like 3 times more likely to die than women or something like that? He says because Chinese men smoke heavily.
Oh, did she say that? Yeah.
Yeah, that's what she said.
Right.
When the women don't.
So, yeah, so they have incapacitated lungs anyway, right? You know, and that's the thing. We don't know enough about who has actually died. We know it's older people. What kind of older people? Were they already infirm, as you're talking about? Do they have emphysema? You know, who's dying? Who's dying? There's a lot of questions, but for ours, it really doesn't matter, because what you are, you know, and that's why those commodity indexes become important, because they're really showing you the forward-looking hit to the global economy. And there's no getting around it. I mean, it's there. It's real.
Hey, Ira, when you talk about Jamie Dimon going to the discount window, what's the significance of that? And does it have any bearing on what's going on? Are you concerned about him doing that?
Yes, yeah, I bring it up, and at first I wasn't so sure about it, but when if he's setting the example, going, well, the bulletproof JP Morgan are going to go to the discount window. That's making sure that there's enough liquidity immediately available. So I thought, when I really started thinking about it after I heard it Tuesday night, Wednesday morning, I said, well, that maybe have more impact because he may have gotten some pressure from the Fed to state that, because the Fed wants to make sure that everybody has immediate access to liquidity. Now, there's certain people who can't go to the window, but if you go back to the crisis of 2007, 2008, people shunned going to the window. In fact, that's when Hank Paulson had to threaten Dick Karavicek, I'm not saying his last name right, but who from Wells Fargo, who he didn't want to even take money. But they were so afraid that if that set a precedent, that people would be running to certain banks thinking that they were safer than others. So I thought this was interesting that all of a sudden Jamie Dimon comes up with this. There's a couple of pieces. There's a Bloomberg piece out, and somebody else wrote a piece about it yesterday and today. So it's worth taking a look at. I think this does have some significance because it tells you that there's some banks out there taking some serious hits here. Because don't forget, JP Morgan itself is still a large trading bank.
Well, look what happened at Northern Trust, Ira. I mean, they just lost 20% of their value in the last week and a half.
Right. Look at it, it's just not Northern. Look at the banks in general, and look at the fall in JP Morgan. I was lamenting that I had gotten out of all my JP Morgan up at 129, 130, and I had shifted over to UBS because I thought the wealth management business was going to drive it. And I was lamenting, but now, I'm looking at it, and this is JP Morgan, my friend. This is not Northern. This is JP Morgan, the paradigm of
that's not
of banking in the U.S.
That's not,
Ira, let's examine let's examine the other side of that for a minute.
Wait 1 second.
Oh.
They're going to go get the stops in the outside reversal quarterly stops from JP Morgan before this is over. I mean, I can't believe they stop right here. The other thing is that you have an ORL you're working or ORL quarterly in the mid cap, which is really ugly. And the other comment that I just wanted, one of the guys from Pax's room made a comment here about, he was trying to come up with a reason, okay? And let's just go back to how we work. One, Spoobon said it was struggling.
Right.
It came within 2.5 points of the S&P target and rolled over last Wednesday. The reasoning is after the fact. The charts turn, the charts show you, these charts show you, and then whatever the reason is going to be, the reason's going to be.
Yeah. No, Judd, that's a good point. And let's go back to that S&P bond chart, because I mean we were this room and we were all over this, and now you know what? You're going to come back down into that famous breakout area of October or September on the quarterly of 2017. So that comes in. We're that 1640 area. We're at 1690 as I'm looking at it right now.
Yeah. Hold on, my thing's got to build here a second. But you got an outside reversal quarterly in that. You got. That's an ugly looking chart.
That is a monster. That's a monster because the inability to make that new high, and we're not talking with hindsight, by the way. This is not Monday morning quarterback. This room. And I a little bit before the conversation in the room, but in the blog I talked about that it was bothersome that we couldn't go and make a new high, and it was a signal to be aware of. That's all. You're looking for a reason to lighten up on your 401k. There was a reason, and I explained that to people. And you're right. But this movement is crazy. I've lived through a lot of stuff. This may be the newest one, not in any one day per se, but is on a sustained basis. This has been wow. Wow. Every time I think I've seen it all.
Conversation this morning too. Is this going to be a forever high, or is this going to be something that's going to take 10 years to repair?
Well, the last time it took 17 years to repair, right?
Right.
I don't know it. Nobody knows. Again, tell me what the central banks are going to do. If the central banks throw all caution to the wind because they're truly, now, again, this is hypothetical. I'm throwing out the hypothesis. If they're really concerned that we could go into a deflationary spiral, I don't know what's going to take place. But I can't stress to you fear, the central banks fear deflation, because with all this debt that's on everybody's books, you cannot absorb a deflationary hit. I'm sorry, you can't. You think Japan has been bad? And Japan went into it with a lot of savings. They didn't load up on debt until they were trying to defeat the deflation. This is their worst nightmare. Go read Ben Bernanke's stuff in 1937. I've read it, and I've read it many times. That is their greatest fear. That's why I call them the 37ers. That's what the Redskins should change their name to the Washington 37ers, because that is their greatest fear. And that's what they have to look at right now and go, have we unleashed the deflation? Has the COVID-19 virus unleashed a deflationary force upon the world? That's it. That is the penultimate question that we will be asking ourselves. Now, how do you trade it? We just have to see what it brings us day to day. I can't give you a full-blown outlook, but look at how insane this is. When we started talking, the NASDAQ was actually up on the day. Now it's down 123 handles. This is as much insanity as I've ever seen in markets for a sustained period of time. But that's what you have to fear. And again, you want me to put up the Bloomberg Commodity Index? Go put up the CRB Index. It's there.
What's the symbol of the Bloomberg Commodity Index? I've got
BCOM.
Okay, there it is.
You got it?
Yeah, I couldn't. It's on a different page, and until they rebuild it, I can't pull that stuff. Yeah. I was talking to the guy that's fixing your stuff yesterday.
Okay. All right, but you see it, right? You see
ORL month.
Go put up a monthly.
That's what's up.
Okay.
That's
but
like bye-bye.
Look where you're going. If you go back to 1998. 1990, it doesn't exist before that. But let's put up the CR. Let me put up the CRB.
Look at it on a semi-annual. It's gone.
Yeah. So this is major stuff. You know what? Again, if I'm worried about a deflationary hit, and I'm only worried about deflationary hits. That's why the podcast, when I posted with Lacey Hunt, and if you guys know who Lacey Hunt is from the Hosington letter, I've been reading his stuff 40 years. He's a very bright guy, and it was an honor for me to really, as I told him, and he was very complimentary to myself. So, but we had some really interesting discussions about this, because this is the issue. This is the issue. The issue that you unleash deflationary forces. And if you don't think it's possible, then you better go back and study about the impact of debt and when you have to repay debt.
All right, so here's another comment from a guy. Maybe a silly question, but if you have good money in the bank, is deflation good for a person with no debt and few assets? Yeah, you can buy whatever you want.
Absolutely. You may as well change your name to Joseph Kennedy. Yeah,
Right.
I mean, that is a good question. And that's what gave rise to Santelli's, tirade about the Tea Party. Because, you know what? Who asked that question? Because I'll answer him directly.
Jeff L.
Jeff, okay. This is historically, what I'm going to tell you is right. I think it was in 31, Andrew Mellon, 1931, as the Depression was really starting to set in. There were those who were basically Calvinists in their philosophy, which was liquidate. Here's what he said. You can look it up. It's a famous quote. Liquidate the farmers, liquidate the bankers, liquidate, anybody who had taken on debt. Liquidate. Because anybody who had money would then be able to acquire assets very cheap. But of course, when you liquidate the entire system, you went to 25% unemployment. If you think that the United States system, political system, can absorb 25% unemployment, good luck to you. And that was, when Santelli and I, and I'm a Rick guy. Rick has been good to me, but I was a Rick guy long before he was having me on all the time. Because Rick puts it out there just the way it is. And his view was, hey, if you didn't borrow all that money to buy houses that you couldn't afford, tough. But I don't want to bail you out. And my point was that, Rick, you have to do an initial. That's why I was in favor of QE1. Rick was totally opposed to QE1, but he has since changed his view because you couldn't take a liquidation of the system. So Jeff is asking the absolute right question. And look how many people made boatloads of money. I'm talking about the large private equity groups who put together funds to buy out all those houses from foreclosure, right? As the banks were just getting rid of stuff, they were bundling this stuff into massive, they were buying 1,000, 2,000, 3,000 residences at a time because they were raising money through funds. So somebody always benefits. And one of the interesting things when I was in college studying, and I learned that more millionaires were made in the early 1930s and through that period than ever in the history of, on a percentage basis. And I was flabbergasted because I came from a family. My father was from 8 kids living in a two-room apartment on the west side of Chicago. They were so poor that I assumed that everybody was that poor. But there were a lot of people who were making big money because they had, as Jeff points out, cash in the bank or somewhere else, and were prepared.
They were buying up insolvent assets.
Yeah, Joseph Kennedy bought the damn merchandise mart for $6 million.
Wow.
Yeah, they sold it for like, what, 250 or 300 million?
They were making $50 million a year in rent for all those years. You know what? It was huge. So, yes, if and that's what Buffett's strength is. Think about Buffett. That Buffett was able to make that deal with Goldman Sachs, right? In 2008. Why? Because he had money. Nobody else got that deal with preferred stock and 10% preferred stock and some equity as a kicker. Well, it was like a phenomenal deal. All right. Any other questions?
No, I'm pretty good. I mean, thanks for coming in. It's always nice to follow up on all this stuff.
All right, thanks, Ira.
Okay, all right. Okay. What's that? Oh, did he send us to collection?
Not me.
No, no,